commentary for the fourth week of October 2025. And it's been a pretty quiet week, but a good one. Most markets up by 1 to 2%. The NASDAQ actually even better than that. And that's ahead of most of the important tech earnings in the US. So even though only a third of companies in the US reported so far, the earnings season so far has been pretty comforting from an economic perspective. So both revenue and earnings for most companies beating and by more than expected. But more importantly, the guidance has actually been fairly strong and CEOs fairly positive about the future, certainly compared to some of the worries that people might have had. Something which we saw overnight with a fairly weak US consumer survey coming out. But markets don't seem too worried about that because, as I said, earnings season has been fairly robust. Individual results of note in the last week was Tesla with, as expected, fairly high revenue and earnings as a result of people front-ending the end of EV subsidies in the US, but also some encouraging news about what they're investing in robotics and AI as well. UPS also a very strong result, maybe indicating some strength in the rest of the US economy. But to be honest, as I said, it's early days, and this week will be more instrumental, especially with the big tech stocks, Apple, Microsoft and Meta all reporting. So probably more about that next week. But the other main news was gold, as we said last week. A lot of sentiment and liquidity, especially coming from retail. But when you look at that in the context of the month, that's really just coming down from the very strong performance we've seen not only the last month, but also for the entire couple of years, actually. So gold's still up 2% for October. And when you look at the rest of the markets, the NASDAQ up 6% and most other markets up about 3 or 4%, it's going to be another good month for diversified portfolios and what's looking like a banner year. Famous last words, but so far so good this year for most Australian diversified investors. And bonds also fairly calm. Now, one of the main reasons, and that was another good thing for markets over the past week, was the US CPI number in the dearth of data because of the government shutdown. This was the one data point that people were waiting for. And as you can see in that monthly number, down pretty much as expected. And there was a sense that maybe some of these monthly numbers were creeping up, and the 3 and 6 month number, which you can see there, getting up to 3% and beyond. That last figure putting a few minds at rest, and hopefully for the right reasons, i.e. disinflation rather than any particularly bad news for the economy. Now, there is some signs that there's a lot of bifurcation in the US economy, a lot of spend on AI infrastructure. That's actually putting upwards pressure in certain areas on energy costs. So there are some things bubbling below the surface. And talking of things below the surface, we have another conversation this week with Andrew Hunt about what's happening in global liquidity flows. And he thinks this week actually might be an important one for reasons that most people aren't watching out for. Now, in particular, he's talked for the past few months about the incredible importance of capital inflow into the US, which has been surprising as people have contended tariffs, etc. And that's actually become highly necessary and is much larger than usual to fund those other two deficits, the current account deficit and the burgeoning fiscal deficit. And there are signs that the US Treasury has been issuing heavily as we expected, and maybe that's causing a little bit of indigestion. Now, one of the telltale signs there is in the US banking sector. One of the things he's also said is it's very important that the US banks join the party and lend into what could be a bit of an inflationary boom around the corner, or whether they tighten their horns because of what they're seeing in private credit. Now, there was a few tentative signs of the latter. So we get into that in a little bit more detail in this week's video, so if you want to listen to that. Otherwise, he reckons that this week or the next sort of few weeks could be quite important, and those are the kind of indicators you want to be looking at. So I'm sure we'll be talking about that as well in the next few weeks. Look forward to talking then. Thanks.